Morning all, how are we all doing? Where's my camera? Where's my camera not working? Work. There we go. Oh, no. Camera's broken. Something wrong with my camera. Help. What does that even say? Weird. Sorry, no camera today, so you'll have to put up without seeing me. Never mind. I'll fix that later. How are you all doing? Everybody good? All good weekends? Morning, Ian, Mark, Amy, Yotko, Baggy, Christian, Evil, Steve, JC, excuse me, Danny, Gav, Monkey, Martin, David, Virginia, Evans. It's time, Gregors, Gerard, welcome aboard. How are you all doing? Another week. Busy week this week. We got very good week for news this week. Morning, Thabo, Johannes. So this week basically is interest rate week. We've got lots and lots of interest rates this week. So if we pop over to the calendar, we'll start off with the news over the weekend because that's nice and easy. There's not a lot. There's nothing much at all happened. So this is going back to Friday. Bank of Japan lead plan to guide short-term rates to 0 to 0.1 range, basically, which is just them increasing the interest rates, as we know. But over the weekend, there's not really been anything exciting happen at all, as you can see. We had core machinery for Japan, and that's pretty much it. So there's no news to speak about, really, over the weekend, which is nice. But this week is basically going to be absolute chaos. So the calendar, if we have a look at the calendar this week. So let's have a quick look at the live rooms this week. So what I'm going to do this week, because there's so much news, it's very difficult to schedule live streams around news because there's just so much of it. So obviously this is today. We're just going to do a complete overview of all the fundamental news coming out this week, etc., the usual stuff. Have a look through all the pairs, do what we usually do. So tomorrow morning, I'm going to do two tomorrow, one at 8 o'clock and one at 12:15 in the afternoon, because we've got the Bank of Japan and the Australian interest rate decision. Then we've got the Canadian CPI tomorrow as well in the afternoon. Wednesday, I'm going to do the CPI figures for the pound, and we've obviously got FOMC on Wednesday as well. So we need to have a look ahead at that. I'm not going to be streaming for that because it's in the evening. 11:45 on Thursday, so sort of a late morning basically, because we've got unemployment for the Aussie, we've got the Euro PMIs, we've got the Swiss franc interest rate, we've got the pound interest rate, and we've got US dollar unemployment on Thursday. We'll have a look at it in a sec in more detail. But I'm going to do one stream in the middle. I had originally scheduled two different streams, but there's just so much information. I'm going to be coming on and basically going, oh, look, the news has moved, and then going away. So I might as well just do one longer stream about everything. And then 8 o'clock on Friday morning, we've got pound retail sales. So those are the streams this week. We're going to do two tomorrow and one Wednesday, Thursday, Friday. So looking at the news, obviously today is dead. We've got no news today. So nice and easy. It's just going to be normal FX movement. I very much doubt we'll get a lot of movement today. They're not going to want to do a massive amount of moving prior to all of this news that we've got coming up this week. So I suspect today is very much going to be rotation. So the market, I would expect to do something a little bit similar to what we had there. Yeah, so we're just going to do one of these days, I would imagine. There might be something that moves the market, but the likelihood is, because of the amount of news this week, we're just going to get sideways movement. So today I don't think it's going to be particularly busy. Up and down, but no real big, strong moves. So it all kicks off tomorrow. Tomorrow morning is the Bank of Japan interest rate decision. So this is the big one that we've been waiting for. There's a forecast of 0.1 negative, which is exactly where we are at the moment on Forex Factory. If you look at other news websites, they are forecasting a 0 there. Now, the Bank of Japan have come out and said that they are going to increase the interest rates. We are expecting them in March, but it may go back to April. We don't know. So I'm expecting this tomorrow to come out at a 0 and for the Japanese yen to power up dramatically, meaning everything should drop against the yen tomorrow. but we'll have to wait and see. So this is a big one. We've been waiting 8 years for this. As you can see, going back to 2016, we've been on negative 0.1 rates and we have not changed. The Bank of Japan does things different. So that's coming out tomorrow morning at some point. Don't know when. We've also got the Australian rate coming out tomorrow at 4.35. That's another big one. Unlikely that's going to change, but the Aussies have dropped a couple of bombshells. So every now and again, we do get an unexpected rate change. We got a 4.1 there on a forecast 435. We got a 4.1 there on a 385. We got a 385 on a forecast 3.6. So there's another one there, another 2 down there. So the Aussies are known for changing interest rates without telling us. So we have to be aware of that, basically, as well. Sorry, bear me one sec. Ta-da! There you go. There I am. So I just suddenly thought, that might be that. I was using my VR headset over the weekend, and Streamlabs decides to go, oh, you've used a new camera. Let's use that one. The one on the VR headset, which obviously isn't the one I wanted to use. So there you go. So hello, everybody. Aussies, possibility of a change there. We'll have to wait and see. 8 years, yeah, more than some marriages, exactly. Morning, everybody else. I haven't said morning too. We've got the press conference for the RBA at 4:30 a.m. So this will be where the RBA will answer questions about what they've just done, whether that be big or small. We'll have to wait and see. But they will answer questions, and so will the Bank of Japan at some point. So tomorrow morning, during the Asian session, we've got the 2 largest Asian currencies potentially having massive upsets that we haven't seen for a long time. So interest rate changes, we went through the massive 18-month rally. We haven't had an interest rate change since November. That was the forecast one, wasn't it? It's November last year. So this is potentially a biggie. We've then got the CAD CPI figures tomorrow afternoon as well. So again, inflation figures for the Canadian dollar. So that's got the possibility to send the US dollar and Canadian dollar absolutely skyward. So tomorrow is just going to be potentially utter chaos. So anything you've got in profit, running on anything to do with pretty much anything, this week's just going to be so difficult to take profit, because you just want to be taking profit all the time, because you're either going to go massively into drawdown or things are just going to make an absolute fortune. So you just got to be a bit careful. But anything you've got in profit on the Aussies, for example, that one there will come down here. New Zealand dollar CAD, if that's sitting in sort of $70, $80, comes down. Everything just comes down basically into profit, just in case it goes into drawdown. It can go your way, fantastic. If it doesn't go your way, you don't want to be in it. You want it banked. So just be aware of obviously what's going on this week. It's a massive week. It's also a bank holiday tomorrow, which is weird because they're releasing their interest rates when the banks are shut. Go figure. So I have no idea how that's going to affect the markets in Asia at all. It's like saying I'm going to release a new product, but we're going to shut the office today. Just, I don't know, it just doesn't make sense. But anyway, that's what they're doing. So Wednesday, we move into CPI for the pound. Interest rates for the pound. Inflation figure for the pound. Inflation is dramatically expected to drop. So if we get that figure, we would expect some weakness in the pound. If we get anything lower than that, we will expect a collapse in the pound. Not likely. But the danger with this forecast is because it is 0.5% away from the last one, there is a lot of deviation available. So if that comes out at 3.6 or 3.7, that could rally the pound. So we'll have to wait and see on that one. But that's going to be quite a tricky one as well. We've got Lagarde speaking at 8:45, 45 minutes after market open in the Eurozone. And then we've got FOMC. So it's the interest rates for the US dollar, 6 o'clock on Wednesday. On obviously the FOMC press conference, this is where the market goes absolutely crazy. If they say anything in this press conference, apart from we are going to change our interest rates in June. Expect the US dollar to be either gone 7,000% up or 7,000% down. Yeah, we're expecting June. If they say anything different, it's going to go mental. So that's coming up on Wednesday, FOMC, going to be a big one. The market normally on an FOMC week, what the market normally does on a Monday and Tuesday is that, or it moves up and then it corrects itself in FOMC. This week, because we've got these coming out tomorrow, it's not going to go in rotation tomorrow. It's going to go mental probably. So it's very, very, very hard to forecast absolutely anything this week. It's just hold on tight and see where everything gets taken. We got GDP figures for the New Zealand dollar coming out overnight as well on Wednesday. Thursday, then we go to the unemployment rate for the Aussie dollar in the morning. Again, massive fundamental news event. That's one of the 4 leading indicators, unemployment for interest rate change. So that's another big one. We've got the Euro PMIs followed by the Swiss policy rate. So this is the Swiss interest rates being announced 8:30. Then we've got at the same time the PMIs coming out in Germany, followed by the SMB press conference at 9 o'clock, same time as the PMIs come out for the euro. Half an hour before the PMIs come out for the pound. Following that, we've got the interest rate decision for the pound. And then we've got the unemployment claims for the US dollar and the US dollar PMIs in the afternoon. So again, Thursday, this is why I struggled on Thursday to decide when I'm going to stream. Literally every 5 minutes, something mental is going on in the market and it's going to go nuts. So Thursday, I've decided to go with 11:45, which means I'll be on basically just ahead of the UK rate announcement for interest rates. No idea what's going to happen with any of this lot. So very, very big day on Thursday. Then in Friday, we're going to retail sales for the pound. And that's pretty much it. And then Powell wraps up the whole week and will probably reverse every single move that's happened in the market for the entire week, because that's what he does. So there you go. That's this week. Hold on tight, cross your fingers and see what the hell happens. But you can't forecast any of this at the moment. The entire market is sitting on the edge of dropping interest rates. It could happen, or pumping interest rates in Bank of Japan's case, but anything could happen this week. This is the one I think is going to be the most dangerous, the RBA. If the RBA come out and change that rate, it's going to upset a lot of already priced in market movement with the Australasian pairs, the Aussie and New Zealand, the commodity pairs. So if that changes dramatically, that would affect the Canadian dollar, which will affect the US dollar, which will affect everything else. So this one's got the potential to cause sort of a cascade effect this week. Even if it does cause a cascade effect, every single day there's something else coming out that can reverse every single move that happens. So it's just going to be like that. It's going to be chaos. So we'll have to wait and see what happens. But it's probably the biggest news week we've had for many months. So and it's all happening this week. So there's your news. We've not got a lot of RSI extensions. There's no ADRs today. This month, really, so far, March, has been very, very flat. We're on the 18th. We're halfway through the month. So far this month, nothing has hit monthly ranges at all. So we haven't had enough strength in the market to get anywhere near the normal ranges, which are contracted. Weekly ranges, we've had very few weekly range hits, which is why we've got no monthlies. Obviously, it's not hit this week because it's Monday. And we've got no ADRs. So nothing's moved so far this morning. So there's nothing to report there. Really. I've just been taking out my Euro-Swiss aggressive drawdown control position. You've just seen that. I had an aggressive drawdown control on from Thursday last week. I've just been taken out this morning. So that's about 2% loss, I think. Yeah, 2.2. Got to try and get on top of this Euro-Swiss. So I can't get out of Euro-Swiss. I'm stuck. Thing's driving me absolutely nuts. I'm about to just shut it basically and take a massive hit. Unfortunately, it's probably going to wipe the month out for this particular account. I'm going to shut, depending on when is the first impact. It's the Swiss rate, isn't it? Which is on Thursday. Could move tomorrow. So with this one, I mean, this is just stuck, totally stuck. It's just hemorrhaging cash. So basically what I'm going to do with the Euro Swiss is just shut 50% of the size out. If it pushes up any further today, I'm just going to have to take sort of 2 to 3K loss on it, which would be a shame because I've got 6K and 6.5K month but I can't let it carry on like this. It's in too much. Every time it looks like it's giving an exit, it rallies back away again. It's just relentless. This Swiss franc is not having a good month. So I just noticed that while I was looking at the ADRs. You're funny. You're funny, Euro Swiss. Yeah. It's hilarious. Stop losses. Aren't they great? So RSIs, we haven't got anything to look at on the RSIs. The hourlies are all flat. We've got a few 4-hour RSIs to look at. So best thing to do today, I think, is just to whiz through all the pairs. We'll do an analysis of everything, see where everything is. But anything I say today and look at today and think that might do this or that today, all over the place this week. There's absolutely nothing you can forecast at all. This is one of the weeks where you look at people that are pure technical traders and don't believe in fundamentals, and you just look at them and go, you're going to have the week from hell, but you don't know it yet. But anyway, doesn't matter. Support, resistance, irrelevant. Fibonacci, relevant. Fractal patterns, relevant. Everything's irrelevant. Everything's moving this week based on what is going on with the news. So we will whiz through all the pairs and have a look. So bear in 1 sec. I'm just adjusting something over here. And then we'll see where we go. Morning, everybody else. I did some backtesting the new EA on brokers data. Did you say Dukascopy have quality data? Well, it's as quality as you can get. Yeah, but not just Dukascopy, tick data. All brokers have got good data if it's tick data. So I do everything with tick data suite. You can pick your broker in tick data suite. I use Dukascopy. I don't know how to say their name. But you can use anyone, any of these. They're all good brokers. They've all got good data. Darwin X particularly good. Doesn't matter who you use. What is important is you're using tick data. Yeah, you're not using whatever comes with your MT4 terminal. You are downloading and verifying data. So it doesn't matter which broker you use. Whoever you want. I use Dukascopy. I've also got data downloaded from Darwin X as well. I've got 4, 5, 6, 7 years worth of Darwin X data I can test with as well. Very little difference in the results, as you'd expect, because tick data. So, what major differences between your new EA and the market structure EA? Go watch the videos, Vantage. You'll see what they both do. One of them is the market structure EA, market structure reversal EA. So it uses that. The other one doesn't. Yeah. So one of them is trading on market structure. The other one's not. That's literally the main difference, the signal. And I've stripped out all the crap that nobody ever uses, basically. So it's much faster. Right. So we'll whiz through all the pairs and have a look at everything. But as I say, this week, take everything with a pinch of salt. Because literally every day you're going to get something moving to some degree. And it could be just that we get whipsaws all week and nothing actually moves particularly. We don't know. We don't know what's going to happen this week. But what we do know is fundamentals rule. And if they decide to change the interest rates on the Australian dollar and they decide to drop them, this is going to be way out the lows within the next 24 to 48 hours. So, just anything you look at here, you have to just look for possible, what can I do with it when the news comes out type stuff. So we'll start off with the yens. I'm just going to whiz through all the yens first of all, because these are the easy ones. So tomorrow morning, the Bank of Japan is changing its interest rates possibly to 0, maybe not. We don't know. But that forecast there says negative 0.1. A lot of other forecasts say 0, which is what I think is more likely to happen than a negative 0.1. So that basically means that if that happens, the Japanese yen will potentially power up. Now, again, this is all speculation because we haven't had an interest rate change for 8 years on the Japanese yen. So we don't actually know if the market is going to power up on it. It may not do. But normally what happens is when you increase your interest rates, it increases your currency strength, which increases that in the FX markets, which means everything comes down against you in the FX market. So assuming that we get the zero, that could be anywhere from 100, 150 ADR to 300, 400 ADR. Don't know. Like I say, we haven't done it before. It's one of those, that word I hate to use, unprecedented events, because we haven't had it. They haven't increased their interest rates in the time that I've been properly full-time trading. So I couldn't tell you what's going to happen. But what normally happens when you increase interest rates is your currency strengthens and then you drive. So if you look at the US dollar yen, we've been waiting for that intervention move or drop from 150 now for a while. And we got back up here, held it, rallied away. So this to me looks like the pullback on the leg down. So this is where we are heading and potentially further. But FOMC on Wednesday. Yeah, so that FOMC on Wednesday can completely undo any yen strength, because if they go, excellent, now we can start buying the yen and the yen powers up, and the US turn around and go, actually, no, it's not going to be June, it's going to be August, because it's not going well. The US dollar is going to power up and this is going to fly back up again. Yeah, within 24 hours. Yeah, this is all happening. So no idea. But right now, I wouldn't want to do anything but short. And I am everything XXX JPY. So this looks like a lovely pullback underway. I wouldn't expect it to move an awful lot today. Sometimes you do get the market suddenly start a move before the news announcement, just because everybody is positioning themselves ready for what they expect to happen. Obviously, we've got difference of opinion. Some people say the rates are going to stay the same. Some people say the rates are going to change. Obviously, for a move to start, you need a difference of opinion, because if this wants to be driven down here today, because most people think that the rates are going to go up, you've got to have people on the opposite side buying it because they don't think the rates are going to go up. If the rates don't go up, that's going that way. So we'll have to wait and see what happens. So at the moment, with all the yens, they're all kind of flat. Everything's sitting sort of in the middle. We haven't really gone very far in the last week, as you'd expect, because nobody wants to put tons and tons of movement in ahead of the biggest news event in the last decade for the Japanese. So it's a lovely short. I've got this account which has got like $600 odd in it, which I've basically started a short position on last week, which the EA is managing for me. Didn't quite get another trade on it today. In anticipation of it driving down. It's either going to give me a push up. Now, if it pushes up, I don't think it's going to go absolutely crazy. It's just going to be, oh, they didn't change the interest rates, let's weaken it. And it'll probably hit ADR, 150 ADR, whatever, and I'll just stop out in the positions. But if it does, there's no TPs on this. And I haven't got the EA set to any targets. This is not the account. The EA isn't managing it with that particular settings. It's on the VPS. So I haven't got it set to basically TP. It's just going to take whatever I can get out of it. Yeah. So I'm shorting US dollar yen, but all of these you would expect, if that interest rate goes to zero, them all to be dropping by 150, 200, 300 ADR, something ridiculous. So they're all pretty easy to look at, the ends. We haven't had an awful lot of movement on most of them in the last month because it hit 150 on the US and we don't go above that level. So it's all short. So those are your yens, really, really easy. You're going to find out tomorrow morning what's going to happen with that. And more importantly, when that press conference is released and they tell us what the forward guidance is, i.e. brilliant, you've done this with your interest rates, now what you're going to do. If they come out and say, our plan now is to increase by 0.1 every month moving forward, as long as the interest rate inflation figures are where we want them to be, you can expect to be continuously buying that yen, i.e. driving everything against the yen down. Aussies. So the Aussie is going to be impacted by its interest rate tomorrow morning. Other news, we've got GDP for the New Zealand dollar. We've got the unemployment rate on Thursday. So tomorrow morning, Wednesday morning, and Thursday morning, 3 big news events, all fundamental shift type news events. So where we are now with these Aussies, as you can see, last week didn't really do an awful lot. Aussie Swiss hasn't moved. Aussie New Zealand, very, very sideways, a little bit of upward movement at the moment. I've got shorts on at the moment. And Aussie US didn't really go anywhere last week. We had one down day. That's pretty much it. So everything's sitting, waiting for the interest rates. We get this before the news, before a news event comes out. So the market tends to drive into the news. It will speculatively buy or sell a few weeks ahead and then sit there and wait, which is basically what we've had. So it's either going to be interest rates for the Aussie. Unlikely they would go up. You never know, though. If you look at where we are with the inflation figures, we're sitting at 4.1, very, 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 very high. Aussie and New Zealand both really, really struggling with inflation at the moment. But also they are coming down faster than everybody else at the moment. So there's not really any reason for them to increase. There's not really any reason for them to decrease either yet. They want to keep this high so that this keeps dropping fast. But as I said, the Aussies are known for not doing it right. They have dropped the ball many times in the past with interest rates and inflation. So who knows? It's very unlikely, but you can't rule anything out at the moment. We're in a very odd period of time where things don't make a lot of sense. So big move up or big move down. If we get a massive rally out of it for any reason, got a couple of potential short orders at 175 and 225, which is that spike off of the news last week. And then we've got obviously the high of the previous week up there as well. Downside, obviously, coming down into these lows at 175. So if we can get a move of 175 ADR, you're potentially going to hit some limit orders in both directions, which will drive it back down again. So don't forget, if there is no news, i.e. they don't change anything, you're likely just going to get a whipsaw. In which case then, if you want to be a scalper, you want to be looking when that whipsaw happens for where the limit orders are likely to drive the price back away again. So that area there. And to the downside, I mean, you'd be looking anywhere down there, which is where they've bought it from before. That propulsion move. Yeah, so, but we'll see. So all of those are completely sideways at the minute. And obviously we'll move tomorrow. The Canadian Swiss, we've got 2 news events coming up for the CAD and the Swiss this week, 2 big ones. We've got the CPI for the Canadian dollar tomorrow afternoon, which is their inflation figure. So we're expecting that to be going up month on month, quite dramatically as well. The year on year, we're expecting to stay as it is. So this is a short-term inflation bounce. So as inflation comes down, it drops fast and then it slows and bounces back up again. And then it drops fast and it slows and bounces. That's how inflation tends to come down. So this is part of the bounce, which will be before the next drop. So if that does happen, if you look at the Canadian dollar, we haven't gone anywhere against the Swissy because we've had a weak Swissy and a weak Canadian dollar. A weak currency against a weak currency means neither of them go anywhere. So at the moment, we're up at the highs where we've been selling from. But obviously, if the news comes out different, we'll have a different result. But if that is an increase, we would expect the Canadian dollar to power up tomorrow. So there is potential for a fairly big bull move off the CAD tomorrow. We've then got obviously the US dollar, which typically will follow the CAD. So there could be a bullish move on the US as well tomorrow afternoon. So we'll have to look at that when we're on and see what happens. But that's what we've got happening tomorrow with the CAD. And then the Swiss franc interest rates are coming out on Thursday. Again, the Swiss are renowned for doing things without telling us. So they basically amble along. You never have a Swiss National Bank press conference. They don't hold press conferences. Jordan very rarely says anything. They just amble along. All of a sudden they go, actually, no, we're going to drop it by 0.5% out of nowhere. And the market just goes absolutely nuts. So we had one there in June 2022. And then we had one in September last year, where they said, we're going to put the interest rates up. And then on the day, they went, actually, we're not going to bother. So we are forecast tomorrow to do absolutely nothing. But if you look at their interest rates, their inflation in the Swiss, they're at 1.2. Target is 2. They're below target, which means that there's absolutely no reason to keep this up here. So there is a possibility tomorrow, I think, of a potential shock drop. On Thursday, of a shock drop on the Swiss franc interest rates. It may happen, it may not. But if it does, kiss goodbye to the Swissy, which is already very weak. And you can see the market has already factored that in. If you look at the Swiss franc pairs, yeah, we've had this move against the Swiss, which has been going on. Tell me about it, Euro Swiss, which has been going on for a good month or so now. Yeah, it's been very, very, very weak, the Swiss franc. And this is the market getting ready for the Swiss to drop their interest rates. They're factoring in the fact that, yes, their inflation is very low and there's absolutely no reason to have high interest rates. In fact, why are you still up there when you're below target? Normally, you'd be down, wouldn't you? You'd be back to where you were. If you look at the Swiss and what they used to do. Oh, there you go. We used to be negative interest rates on the Swiss franc. Yeah, COVID here is where COVID came out. We were negative interest rates. We've always been at negative interest rates. And then as everybody else started to increase their interest rates, so did they. But what didn't happen was inflation going up. The Swiss inflation figure just didn't go anywhere near where everybody else's did. So they were increasing interest rates for no reason, really. So there's a chance that they will drop it faster. So we need to be aware of that. So when you're looking at something like the CAD Swiss, the thing that's probably most likely to move it this week is going to be the Swiss interest rate change if that happens. So that will be where we will be going if they drop the interest rate, which is going to be horrible for me because I'm a lot short on the Euro Swiss. But the good thing is the Euro tends to move with the Swiss franc. So, but anyway, so that one is stuck sideways at the minute. Again, there's a very high probability this week of this news all coming out and doing this because we're waiting for June. The big one on Wednesday with FOMC and the FOMC press conference is going to give us that guidance as to, are you still looking at June? In which case, then everyone else will look at June. And we know that we've got 2 more months of sideways, or 3 more months of sideways, depending when the market decides to make its move ahead of June. So CAD Swiss sideways, we've looked at the yens. Euro odd, so looking at the euro pairs this week, we've got the Swiss National Bank obviously changing their policy rate. So the euro news kicks off tomorrow with, Wednesday with Lagarde. Probably not going to be particularly impactful, but she is speaking, so we need to be aware. So your first news events for the euro are coming up on Thursday with the PMI figures. Then we've got the Swiss rate coming out. Yeah, so it's quite a big one next on Thursday for the Eurozone. But that's pretty much it for those. I'm just seeing when was the pound? It was 12 o'clock on Thursday. So the pound will also move the euro. We're very close trade partners in the same way as the Aussies and the New Zealanders. So when the Aussie rates change, the New Zealand dollar tends to go with the Aussie. When the euro changes or the pound changes, we tend to go together. So we've got that coming up, which you need to be aware of for euro as well. But obviously everything's going to affect the euro this week. So, but that's the big one on Thursday when the interest rates change for the pound, or don't change in this case. So looking at the, obviously Australian dollar is coming out tomorrow. So that's going to affect this one. Looking for highs and lows. So when we get this movement off of any of these news events, if the news is as expected, we will get some kind of whipsawing and potential movement. But what we should still be looking for is, where are we going to drive to, and where is the market driven from last time? So this area, we bought it. If it gets down to there this week, good place to start buying it. Hopefully we'll get an RSI extension, we can get in. If it pushes up, we've got this area up here, which is our last high. And then we've got this area here, which we sold from multiple times as well, which is 125 ADR. So if we get a strong push up into ADR, good short. If it pushes even further up into our RSI or ADR, good short. Yeah, so we can start new positions on these. If they don't change the interest rates and the CPI figures aren't massively as unexpected, when we get to these support resistance levels, that's likely where the market's going to start a move in the opposite direction from. So Euro CAD, absolutely sideways, dead as a door now. News not doing anything. It's very hard to say where anything's going. That's only an ADR away. That's only 175 ADR away. Yeah, so very difficult to forecast anything on the Euro CAD. It's just going to move, obviously, when the news comes out. Euro Swiss has been pushing for ages, as we know. We're up at resistance at the moment. I can't believe that. I hate stop. This is why I don't use stop losses, right? There is absolutely no reason for me to have just taken a 2.2% loss on this account. I had to put a stop loss somewhere because it was an aggressive drawdown control position. I expected them to maybe rally out the highs. I didn't know how far. You never do. This is the problem. I put it where I thought was probably, yeah, if they just take these highs out, they might come up to here. But they didn't. They decided to go a little bit further. And now it's coming back completely the opposite direction. So, just painful. But the only reason I'm taking this with these buttons instead of these ones is because this is being managed by the Market Reversal Alerts EA, not the new EA. Oops. So getting back into that aggressive, yeah, huge rejection on this. So shorten again. So yeah, so obviously this week I would expect us to be coming back down to here. So the reason I've just taken that aggressive back on again is what I'm expecting is to come back and retest this area and test this propulsion gap at some point before all the news kicks off this week. In which case I can then take that aggressive off and do a little bit of aggressive drawdown control on the other account. But anyway, so rejection at the highs, limit orders triggering. They just triggered a little bit higher, unfortunately for me. So yeah, we are massively weak on this Swiss franc, and this is what worries me this week. If they decide to drop that Swiss franc interest rate this week, you can kind of kiss the Swiss franc goodbye. Bear in one sec. Just need to adjust something over here again. Another account running over here. So yeah, I mean, you can see what's going on. We're range bound, and then we're getting a slight move, and then we're going range bound. And basically, I'm expecting to come back down and test down here. Ideally, if that interest rate doesn't change on the Swissy, I think we can probably do that. If the interest rate does change on the Swissy, it's only going one way down, and that's going to rally everything against the Swiss franc. So quite dangerous on this one. We are flat, but we'll see what happens. Euro pound. I've got buys on this one at the moment. Again, it's another one of those I've been in for absolutely ages. Took that out, took that out, took that out, took that out, took that out. Yeah, been taking profit out of this for the last month and a bit. It's just stuck. So again, hopefully this week we can get that move up or down. I don't care. It's just want to move, just go somewhere so that I can manage the position. But basically, it's just sideways at the minute. So as you can see, we're waiting for news. The pound are not going to change their interest rates this week. It'll be very, very unlikely. Anybody will, really, apart from the Swissy and possibly Aussies. But so yeah, we're just waiting for some news. So if we get decent CPI figures, if the inflation figures have not dropped for the, is it the euro? Sorry, am I talking rubbish? PMIs, isn't it, this week? Not CPI for the euro this week. CPI is for the CAD. So yeah, if the PMI figures do not drop, and we get positive PMIs, that's going to rally that that euro as well. So where we are at the moment, we're bang in the middle of nowhere. I've been in this since January. One of the first trades I took this year. I think it was there. Yeah, right at the beginning of January, 2nd of January. And all we've done is moved down, gone sideways. We've moved down, we've gone sideways, we've moved down. And that's where we've basically been for sort of 6-7 weeks now. So not going anywhere. Euro New Zealand, just got out of a long on that last week and a couple of shorts week before. Not really going anywhere. We're in a massive range at the minute. We're right up at the highs. So there's a good chance that we might get some bearish price action from here. So if nothing happens with interest rates, nothing happens with inflation, nothing happens with news being massively positive or massively negative, you'd just expect it to come back down again. While we're waiting for someone to decide they're going to change interest rates. But if that Aussie rate changes, that New Zealand dollar will rally with the Aussie, whichever way the Aussie goes. And it's unlikely they'd put it up. It's very unlikely they'd pull it down. But if anything, they'd probably more likely pull it down. But it'd be too early. So I'm not quite sure, even if the market, if the Australians do reduce this interest rate down to 4.1, it would normally have a negative impact. But what the market might well see is, what you're doing, you idiots, you shouldn't have done that yet. You're going to put that up next month. So they might actually buy the Aussie in the interest rate drop. It's impossible to tell. Banks have scorecarding systems a little bit like this, where they're monitoring everything. And if something happens on one currency, but the other currencies are all expected to do something which is more likely, then those are what they will focus on. This becomes a byproduct that will just get pushed around by the other currencies. So I doubt they're going to change anything. But if they do, you would expect to see probably a large drop in, well, it's difficult. It's very difficult this week. I think personally, the Aussie rate will come down if it does anything, which would normally rally the Aussie, obviously the New Zealand in this case. But I'm not sure the market's going to do that this week because I think there's too much other news that's going to trump anything the Australians do. And the only reason I'm talking about the Australians with more likelihood of changing is because they and the Swiss are the ones which are known for just doing stuff without telling anybody or giving any kind of forecast. So, but anyway, I still want to be playing a range on this because even if it does rally out the highs there, it's going to come back down again. It's got this massive propulsion gap to sort out. So we'll see. But as I say, with all of this stuff at the moment with the euro is the least impacted this week because it's only got PMIs. Everybody else has got interest rates and inflation figures and other things coming out. So at the minute, we are absolutely bang in the middle of the previous range, pretty much for the euro US. US dollar obviously is FOMC this week on Wednesday. Could go either way, couldn't it? So we'll see what happens on that. But I think it's more likely they're going to come out on Wednesday in FOMC and say we are looking at June. We are confirming June. June is definitely what's happening as long as we don't get any inflation figures changing. So that will probably have a negative impact on the US, which will probably have a positive impact on the euro US. But there's too many other factors this week to sort of say for sure. So I've got a long on euro US dollar at the moment. I'm just going to target somewhere up at those highs at the minute. If we can get a move up, fantastic. If we don't, fine, whatever. But it's just a case of waiting for FOMC with this one. And obviously that comes out on the same day as the day before the PMI figures come out. So the US is going to move Wednesday evening, and then the euro potentially moving on Thursday morning. But as I say, it will move off the CPI figures for the pound as well. These are, again, massive mover for the euro because if we get a huge move on the pound, the euro will get dragged with that as well. So there's potential for that to move on Wednesday morning. Every day this week, literally, something's going to move something. It's going to be a fun week. Hopefully, a payday week. We'll wait and see. Pound odd. So looking at the pound pairs, the main movers for the pound this week are obviously going to be on Wednesday morning. When we get our inflation figures, that's forecast to come down dramatically, which will take inflationary pressure off, which means that interest rates will come down faster. We will fall in line with the euro and the US and look at June. And again, obviously, the market will go, oh, look, it's come down really good. That's great. We can drop the pound because that means that they will change their interest rates when everybody else does in June, as long as in the FOMC press conference, we don't get the FOMC, the Fed coming out basically and saying, actually, no, we're going to put that back to August, in which case then that move we've seen will just get completely undone. Again, That everything is affected by everything else. This is the beauty of FX. Doesn't matter what you're trading, you are always trading two things. Yeah. So if the Aussie interest rates drive the Australian dollar down dramatically and it flies up to here on Wednesday, the pound could drop dramatically and undo the entire move. So that move is caused by that and that. The other thing you can get, obviously, is the Aussies drop their interest rates, which drops the Australian dollar dramatically. Everything flies up to there. And then the CPI figures don't come out at 3.5. They come out at 4 for the pound. And the pound will rally through the ceiling and you'll get a 500-600% ADR move in 2 days. You never know. You can't tell what's going to happen with anything. So with all these pound pairs, it's all going to be revolving, obviously, around the CPI number on Wednesday. But obviously, everything else has got the potential to move it as well this week. So bang in the middle, again, of a very, very nice kind of range here. So any kind of pushes down, looking to buy. Any kind of pushes up, looking to sell. We've got nice propulsion targets to the upside there to aim for. And this big one down here at 175 ADR to aim for. But it's got to get past that support, which we've bought 4 times, which is that previous resistance, which is that propulsion gap, basically. Pound CAD. Difficult to know what else to say about it, isn't it, really? It's going to move on the Canadian dollar. It's going to move on the pound. So we've got a nice 150 ADR. If you think about how much stuff's been moving when we've been looking at things and how many ADR hits we've been getting recently, we've been getting very few ADRs, have we? And weeklies, we've had none. And obviously monthlies, we haven't had anything this month so far. So when you look at the amount of movement that we could likely get off a news event, a 150 ADR move, which would take it up into that high, is quite dramatic. It's something we're not experiencing very much at the moment. 150 ADRs are very, very few and far between. So a move down into this low, which is again 150 ADR to the downside, is really all you would expect before some kind of undoing. Yeah, big push up, pull back. Yeah, big push up, pull back. Big push up, pull back. Really, if we get 150 ADR move, that's pretty extreme. That's 151 there. So that's nearly 200 ADR. So any kind of big, strong movement, if it isn't a fundamental shift, i.e. they haven't deviated from the forecast, you're likely to see the whole thing undo this week. So for scalpers out there that want to use stop-loss based strategies, mean reverting any strong move is probably not a bad idea this week, unless that number is not massively different. So pound CAD, pound Swiss, sideways for the last 2 weeks in this range. Could go either way. We've got the Swiss franc announcement. We've got the CPI figure for the pound. Pound New Zealand, obviously, sideways. Everything is sideways at the moment, as we know. Pound US has been a little bit more up and down, but it is still, sideways. We've had a bit of weakness on that US dollar, which has given this a bit of a rally. We've had good strength on the pound as well, which has obviously helped this along the way, but it's undone the move. Yeah, the usual stuff I got out of the shorts there. It's moved down 50% retracement. So we're basically back to, are we going to go bullish market structure or is this an A-shaped recovery? We'll find out this week. New Zealand pairs. Again, so I've got a long on the New Zealand dollar CAD. The New Zealand obviously is going to be affected this week by the Aussie rate tomorrow morning. So that's the main mover for the New Zealand dollar. We've also got the New Zealand dollar GDP figures coming out on Wednesday evening. And then we've got the Australian unemployment rate. So there's 3 major news events for the New Zealand dollar. Basically, 2 of those are Australia releasing news, which will affect them. So, yeah. No idea where this one's going. We had the big propulsion gap off the back of the New Zealand dollar interest rate drop. So they did not change the interest rate. For some reason, the market decided to tank it. Again, I said that's not a move. There's absolutely no reason for that. Undo it. There's no reason really, unless the Australians change their interest rates this week, that the New Zealand dollar should move dramatically hard in any direction either. So I've got New Zealand dollar CAD long on at the moment. Just going to put a target up there. So just looking for push up into that propulsion gap. Yeah, so the New Zealand pairs, we're going to be pushed around by the Aussie this week. So you can't really tell anything from technicals, obviously, at the moment. So looking at all of these, again, there is no strength in any direction on the New Zealand dollar. We are sideways as everything else. The New Zealanders basically have the highest interest rates in the world, along with the US at the moment. Their inflation figures are the highest in the world, coming down at a decent rate, but again, starting to slow. Their unemployment is incredibly high, as is Australia and obviously US at the moment, and that is going up. So with unemployment, what happens is obviously if you increase your interest rates, it makes people poorer. That leads to businesses cutting costs. The main cost cutting is unemployment. It's people. So it puts the pressure on. You cannot increase that anymore. So from the New Zealand perspective, long term, we're looking for really them to drop the weakness to start in the New Zealand dollar at some point. But they can't do anything at the moment. Unemployment's too high. Their interest rates are too high. Their inflation is too high. They are stuck. They can't do anything. So the thing that's going to move this one, particularly this week, is going to be the Swiss franc. If the Swiss drop their interest rates, you'll be up there. If they don't, I suspect we'll undo this weakness that we've had in the Swissy, because that's what people, I think, are expecting. So bang in the middle of the range at the moment. Up or down. Can't really say anything at the moment, can you? Because it's just stuck. New Zealand dollar, US dollar. Huge range. We're down at the lows, so it's a good buy. I'm long already on it on the H1 M5 mean reversion entry from Friday. So I have one long on. I haven't put a target on this one either. So just going up, just below those lows, really, somewhere up there. That I doubt I'll get up there, because the EA will close the position before I get there, because it's a single position. Yeah, I won't get anywhere. So I'll be getting out probably somewhere around about ADR. If that continues to push up. So New Zealand dollar, US dollar, we are totally range bound at the moment. We're putting in slightly higher lows, look. So we got a low there, high, higher low, higher high, higher low. Then we got a double top, and then a higher low going in now. So it is bullish market structure, but within a range. So we'd be looking for push up, and then potentially some kind of lower high to go in. But again, we'll wait and see what happens with the news. The movement on this is going to be tomorrow morning with the Australian dollar. So tomorrow morning, we'll either be up there or we'll be back down retesting these lows, I'd imagine. And the good old US. So US this week, obviously, it's FOMC on Wednesday. The US will be pushed around by everything else this week until we get to FOMC. So I think there's a good chance that in this press conference, they are going to be very cautious, very bearish on the US, because they don't want to really upset the market until they're ready to drop those interest rates in June. So there's no reason for them to come out with anything bullish. So if anything this week, I would expect probably negative movement on the US at some point. But that's only negative movement on the US. Yeah, the Canadians have got their own news, the Swiss have got their own news, and the Japanese have got their own news. So when you're looking at the US pairs, it's going to be driven by one or other of those currencies. US dollar yen is the only one I would go, I'm not interested in anything but shorts. There you go. So there's not really a lot you can sort of tell at the minute. Until we get this news out the way this week, we don't really know where anything is going. And this is one of those, the closer and closer we get to June, the more and more important these fundamentals are going to become, because the market is going to want to start a move. The market always factors movement in. So when you have an interest rate change forecast in June, the market doesn't wait until June. People will start to sell the US dollar in May, ready for them dropping interest rates in June, which is why you see things moving quite fast. And you're like, why on earth is that moving? Because they're factoring in or pricing into the market a movement which is expected to happen. This is why news has massive consequences when that forecast is not what we expect it to be, because they've sold the crap out the US. If they don't then drop the interest rates in June, where the market has been pricing in that they will do, they need to get out of those movements. You need to get out of this short because you're wrong. So you take profit on the move. So this is why you see news events this is why we have the red and the green on the news, because it's not what we were expecting. Therefore, it's going to have probably the opposite impact. So we get that movement. However, we have things like the Australian dollar at the moment, where if they were to drop their interest rates, the market will look at that and go, probably what you'll get is an initial spike. And then the market will look at that and go, well, they've gone too soon. They're going to need to put that back up next month. So they won't sell the Australian dollar. They'll actually buy it. So everyone goes, hang on a minute, that's red news. Why has it flown up 200% of ADR? Because the market is factoring in what it thinks is going to happen, not what has happened. We know what's happened. Again, it's the same as an indicator. These are just indicators. They're fundamental indicators, exactly the same as these. All these do, moving averages, propulsion gaps, support resistance. They tell us what's happened in the past. Has absolutely nothing to do with predicting the future. It can't tell us, because there's a line there and a line there, whether or not it's going to come down from there. There's a probability of it coming down from there, but when it gets there, it will depend on what the fundamentals say about the US dollar and the Swiss at that point in time. Same with the fundamentals. They're exactly the same. They're just an indicator. When the news comes out, we know the news. Now what we're interested in is what's the next one going to be. That's what we factor in, or what the market factors in. So there you go. So there's an overview of this week. It's very woolly. It's very unknown. It's very unpredictable. I'm even contradicting myself on a lot of these things and looking at them one day, 1 minute and going, yeah, that's probably going to do that. And then I think, well, yeah, but it's probably going to do that if that doesn't do that. Yeah. There's too many things going on for you to even speculate about a move on any individual currency, because if you get a positive move on the New Zealand dollar and the Aussie dollar, and then the Swiss, the yen, the pound and the euro all hammer the other way, it doesn't matter how positive that move on the Aussie was, the Aussie will get absolutely killed if everybody else has more positive news than they do. Don't forget, it's two things at play all the time. It doesn't matter if the New Zealanders give you the best news in the world. If the Swiss give you better, it's coming down. Yeah, so it's the strength of this news. And the Swissy this week, I think, is the one you need to be watching. Because these are the guys that are unpredictable. Yeah, they will change that with no qualms at all. They will just go 1.5. Sorry, were you not expecting that? So we'll see. But if it all comes out as expected, I'll be coming on Friday and going, well, that was a crap week, wasn't it? Because that's what we'll do. But we'll find out on Friday. So there you go. That's kind of all the pairs. But as I say, anything technical, forget it, throw it out the window. Unless the news is as expected. If you get a news as expected and it flies to a level of support, buy it, because there's no reason for it to do that. This New Zealand dollar that I've got on the screen right now is an exact prime example. Yeah, I said there, didn't I? You remember? I got along there. I said, when that came out, I said, there's absolutely no reason for this move whatsoever. The New Zealanders have come out and said they're going to keep their interest rates the same. They came out, they kept their interest rates the same. The market tanked 200% ADR, and I said, that's rubbish. It's coming back up here because there's no reason for that move. The fundamentals say that the market should do that. Then it did. Yeah, so if we do get big, strong moves, if the New Zealanders, or the Aussies, for example, keep their interest rates the same, and you see the New Zealand dollar up there or down there, it's coming back to there because there's no reason for it to be up there or down there. It should be where it is now because nothing's changed. Yeah, this is the thing you have to understand about this. If the market factors in a change that doesn't happen, yes, you get a big move which lasts for weeks. If the market suddenly moves on what was expected to happen, there's no reason for it. This is where you fade all the moves. Yeah. So when the news comes out at 1.75 and the Swiss has dropped 200 ADR, fade it. You don't know when. It could drop 3 or 4 or 500 ADR, but it's not. There's no reason for it to continue to do the thing that it's doing. Yeah. So it's the same with all news events. If it comes out as expected, you get whipsaws. Or you get A-shaped recoveries and V-shaped recoveries. If it doesn't come out as expected, you need to think about it. But usually, whichever way the market's gone is where it's going to go. That's why it's gone that way. Morning, Rico. Morning, Easy. Slightly different version of an old Klingon saying. What? A slightly different version of an old Klingon saying. Perhaps this week is a good day to die. Yeah. Week to die. Perhaps today is a good day to die. Euro Swiss specifically for me, that's the one that's going to kill me this week. Everything else is fine. It's just this this Euro Swiss. But I've got that aggressive back on again, you know, and if we can get pushed down on it, brilliant. But you know, if we can look, I mean, if you look at what I've just done there with this aggressive drawdown control position, yeah, which is the one that's stopped out from there. If it pushes down an ADR today, I'm out. I'm flat. I'm done. That's it. It's gone. That's all I want is an ADR, and that's all I've wanted on the Euro Pound and the Euro Swiss for what seems like 2 months now. It's just not giving ADR movement. And when it does, it's the other way. And then it goes, nah, 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 nah. And then it moves, and then it's nah, nah, nah. That's all it's doing. It's just going like that all the time. Nothing to do. You get these moves every now and again, you just have to go, screw you, I'm out. You have to be a dragon. I'm out. I don't believe in your business plan, and I don't believe you should be doing what you're doing, so I'm out. I'm not investing anymore. What can you do? But, so yeah, so that's got the danger of hurting me this month. I'm up 17k on the account at the end of the day. It's not, you know, it's I'm in $5,000 a drawdown on a 17k profit. So it would be nice for it not to hurt me. But what I will do with this one, this is the only position I've got on that has got any kind of heat on it whatsoever. And the only reason I'm still in it, I mean, I would never normally be in 10% of drawdown on an instrument individually. The only reason I'm on it is because everything else has gone absolutely fine. And you can see I've been working it hard, and I've been keeping price within an ADR for the last 2 weeks. We just haven't had enough movement to get out. I had an exit, which was a 2% loss last week, I think it was. Here. Was it here? Probably, wasn't last week, was it? Or was it there? Yeah, no, it might have been. I think I was in about 2.5% of drawdown there. But the problem I've got is obviously I've got large lot size on at the moment. This is one of the problems with position trading is when you get into these long squeezes, the reason you stay in quite a lot of heat for a long period of time is because if you're using a lot multiplier like I am, if you don't use a lot multiplier, it doesn't make a difference. But if you're losing a lot multiplier, you've got to be aware of, obviously, you're increasing lot size all the time. So you get to a point when you've been in for something a long time that you are taking large lots all the time. So the way to stop that, and that's what I'll do here, is if this pushes up further, is to take half of that off, half of that off, half of that off. I will leave that as it is, probably. But you just knock half of your lot sizing down, and you get the next scaling is going to be a lot smaller. So it just reduces that rate of drawdown if it continues to push against you. But normally what would happen in these situations, obviously you'd have a pullback by now, but the Swiss franc is just not given any pressure release. Well, not enough for me anyway this month. Nothing you do. Every now and again you have to take them on the chin. You can't be a winner every month. If we could, we'd all be multi-billionaires. But there's only one trade on one account. So everything else is fine. Camera came back on. Yeah, no, I figured out where I'd gone wrong with my camera. I had it set on the wrong camera, basically, because I was using my VR headset this weekend. So I bought a game this week that I haven't played for a long time. And if you're not my age, you won't even know what the game is. It's called Myst. It's a game from the 1990s. Maybe 2000s. Probably 1990s. Which was one of the very first games, computer games, that incorporated full motion video. And they've redone it for VR, which is fantastic. But my God, it makes you feel sick. I had to stop playing it yesterday because I was getting to the point where I was getting so motion sick I had to stop. Brilliant game though. Morning Astro, morning Chucks. Has anybody got anything else they want to discuss today? Anything else they want to look at? If you have, let me know. This week I've got, to be honest, this week, the plan for me over the next 2 weeks is to try and get the MT5 version of this new EA done, which is driving me up the wall already. And get some set files produced for the position trader EA. But with this week, we've got so much news on this week, I'm going to find it quite difficult to, I think, focus on much, because every couple of hours something dramatic is happening in the market. So I'll see how I get on, but I want to get some set files out there ideally that will for different circumstances with the position trader EA. But if anybody's got anything else I want to look at, let me know and I can look at it. But I can't really be much help with forecasting anything this week because I ain't got any control over what's going to happen, as you know. Up 84% on the hedging account this year. So far in March. DAX. I'm going to need to pay attention to this week as well, because this is in some drawdown, which I need to be aware of. I really want to pause the EA on this and just manage this manually just to get it doubled and then stop. DAX. So DAX this morning, nice break at the open, nice easy profit this morning. So we broke south down to 1 and a bit R, pulled back up. So I'm out of the DAX this morning, but it's now rallied crazy. So if you went with the 2R target, you're hedged at the moment. If you're using hedging, if you're not using hedging, you've flipped long, probably. DAX long term, I have no idea. I mean, DAX has been sideways for 3 days, as you can see. So huge rally. All the stock indices are rallying like crazy at the moment because obviously they're expecting the Forex markets to drop, which obviously values stock. So difficult to tell. We're back in a bull market, put it that way. I think now we are back bull. So obviously this is COVID recovery, bear volatile. This to me now looks like we're back in a bull market. So we will be pulling back at some point, probably 50-30% of that move, and then carry on. I think we're back to normal. So we should expect all markets to rally long term, but short term it'll come down at some point and correct this move. So look at it, we're extended on the daily look. So either a flag type move or we'll get a pullback. But yeah, interesting. I think the DAX obviously is rallying quite hard at the moment, as all the indices are. So, but I don't trade long term on indices, so. But I think we're due a pullback. This week is the week we will pull back if we're going to. So if we get positive US news this week, if FOMC is bullish for any reason, if they for any reason say, you know what, we thought it was June, it's not, the markets will drop, the stock markets will drop because the US dollar will rally. Well, actually, no, it's not necessarily true. I mean, the thing with the US dollar at the moment is if we get any bullish news on the US dollar, it's more of a delay than a bull. Yeah, I mean, it's more likely that they will not drop the US, but there's no reason to rally it. No one in their right mind is going to start buying the US dollar ahead of an interest rate drop. But when are they going to do it? This is the thing. This is what we're all waiting for, and we've been waiting for ages. It's the absolute focal point of the market now, is when is the interest rate going to drop on the US? We keep getting told June, but we were told April, we were told May, now we're told June. So are we going to get told July? And then are we going to get told August? And then are we going to get told September? And then we're going to say, oh, actually, we're nearly Christmas. Let's do it in January. So, very hard thing to predict, interest rate drops, especially on an economy like the US at the moment, where they are struggling to get on top of that inflation number. So, if that inflation number doesn't come down, they will have to put interest rates up again. If that pushes up, don't forget, when in times past, I was talking about this with a mate from the gym at the weekend. In times past, we were sitting there going, my mortgage is coming out of its fixed rate in a couple of years' time. I took that out when it was zero. I'm on a tiny mortgage. We were talking about, it's 5.25. Cool, isn't that high? And then we were thinking, well, no. When you compare it to the 10 and 15% interest rates we had 20, 30 years ago, it's not high at all. There's a lot of movement to the upside on these interest rates yet, if necessary. And this is what causes it. So if this suddenly spikes and we lose control of it, let's say, for example, a war kicks off that suddenly involves the US and the UK, somewhere in the Middle East, somewhere in Eastern Europe, for example, where we've got Russia poking the bear. Yeah. Those are going to do nothing but go that way. So there's a lot of things can change, literally change on a dime at the moment. But we will see. Morning, Great Filibuster. Tra-la-la, that's a new name. If I start with 5K, you said in the bootcamp the first entry should be 0.02 to 0.03. If I start with 3K, 0.02 is okay. If you're doing everything manually, yeah. If you're using the EAs of any of my EAs for position trading, then you don't need to worry about lot sizing. It's all done for you. But as a guide, 0.01 per 1,000 or 2,000 in your account is a good starting point. But bear in mind, a 0.01 lot has got a completely different value on a US dollar pair to a pound pair to a euro pair. So, yeah, if you've got 3K, then 0.0. I mean, the reason I say the best balance to start a position trading account with is somewhere around about 3 to 5K is so that you don't start with 0.01 lots. If you go in with a 0.01 lot, you cannot do drawdown control on that. Yeah, you can't close half. I've got a 0.45 on there as a buy. If it keeps screaming against me, I can reduce that down by 0.05, 0.1, 0.15. I can change that lot size by any multiplier I like. With 0.01, you have to close the entire position. You can't do drawdown control. And a big part of position trading is drawdown control. Yeah. So that's the only reason I say you can position trade if you're not using any lot multipliers, which is the way I used to do it. I never used to use lot multipliers. It's only since I've become more confident position trading that I've started using lot multipliers in the last sort of 3 years. If you're not using lot multipliers, you can get in with any lot size you want, really, and just stay with the same lot size and then just do drawdown control to change the price. So if you get in with a 0.05 there, and then you take another 0.05 there and another 0.05 there, and then it pushes further against you, your price is changing as you're entering these trades in. Let's say there's a 0.05 there. Your average is going to be bang in the middle of all of them, isn't it? Reducing that down to a 0.03 moves that line up. Reducing that down to a 0.02 moves that line up further. Yeah. So what we're doing with drawdown control is we're adjusting the position of our entry so that it's closer to price. You do drawdown control and everything below the line. But if you get in with a 0.01, you can't do that. If you get in with a 0.02, all you can do is 50% drawdown control. Not ideal. So again, ideally, I would say you want to start with 0.03s, because then at least you can do a third drawdown control. So you can close a 33% of that position twice. But there's no right or wrong. If you use the EA, it will automatically calculate it all for you, which is why I sort of say, and you should be using EAs ideally, because you make mistakes. EAs just get in. They do as they're told. They get in with the right lot size. They scale out as you told them to. They do everything you tell them to. You don't press any buttons. People fail in strategies because they get bored. That's the biggest killer in trading. I'm sitting here. There's no setups today. If you're trading RSI, mean reversion, you're sitting here today going, come on, I want to take a trade. I like the look of this. I'm going to short this. That's not part of your strategy. You shorted it because you're bored. Yeah. If you use automation, it will just do it. You haven't got to worry about it. Evans, I tested 75% ADR hedging with the new position trading EA. I haven't tested that. How long did you test it over? Blimey. Well, that's an aggressive setup. Let's try it. Oh, hang on. I don't think I've got that on ADR. Oh, now I've crashed my terminal. No, I haven't. As it is set on ADR. Would help if I used some kind of date in the past rather than yesterday. Does the POS EA have alerts to tell you when to turn it on? No. It's pretty good, isn't it, so far? Nice equity curve. It's not even a curve, is it? It's just a straight line. So I'm just adjusting a trade over here. One sec. Yeah, see, this will work until it doesn't work. I'm using a large lot multiplier on this, so and very tight targets. Only looking for 0.5% to 1 ADR as a profit. So 0.5% to 1% as a profit. But this strategy, this 75% ADR strategy, is something I've done back testing on, and it is good. But in a squeeze, you are getting in really early on a move. This is the thing. So it can be quite dangerous. This is one of the strategies I'm looking at for prop, because 80% of the time the market is ranging, obviously, as we know. And it spends 58% of the time within ADR. So if you're spending 60% of your time within the average daily range, it makes sense when we get to 3/4 of that average daily range to start looking for opportunities to short, because there's a 60% probability it's not going to go much further, isn't there? So it's a good strategy in range-bound markets, which are not very news impacted on a daily basis. But it won't work very well when there's news. This week, if you used a 0.75 ADR entry this week, I think you'd be in massive trouble. But we'll see. What moving average is that using? I was going to say, this didn't look like it was taking trades in the right place, because this is a 9 moving average, and I'm using a 15 smoothed here. I was testing different moving averages for entries. That's not a bad equity curve, is it? Excluding that trade it was in at the end, but yeah. It's a good strategy when you're not being squeezed. I think you'll find you're in all sorts of trouble when you get squeezed. But it's one that will work on prop sometimes. May I ask you which prop firm allow you to run the EA? I have no idea. You'll have to check with prop firms. They've all got different rules. But I mean, they're all basically, as we know now, pretty much frauds. So not so much frauds. I mean, they're all basically very hard to make money out of, because the manipulation in price that we know has now been going on since MetaQuotes quite rightly removed all the licenses from the brokers that were feeding the prop firm data. They're off. Now they've all had to start up either their own brokerages, which has cost them £250,000 per country, which is why you can't now trade on prop in the US with most of them, because it's too expensive to get a license if you want to do it properly. And the rules are just too tight. Yeah, if you want to trade and want to make money, you need to use your own capital so that you haven't got restrictions on your account. Yeah, you restrict your account with stuff that makes sense, not stuff that doesn't make sense. It makes no sense to put a listing, a rule on your account that says, if one day I go into 5% of drawdown on my account, I shouldn't trade anymore. Bollocks. I've been doing it for pretty much a decade. No problem. Not a decade, actually. But, this is what your account's there for. It's there to be drawn down into. Yeah. There's nothing wrong with that at all. That's normal. It's just, that is risk. Yeah. Why on earth would you say, if you go into 5% risk on your account, we're going to shut you down? Because this is what every bank, institution, and professional trader on the planet does on a daily basis. But they don't want you to do that, because there's a possibility you might make money, which will cost them a load of cash, because you're not trading live accounts. You're trading a demo. Even when you're trading a live account, you're trading a demo. There's no real money at stake anywhere with any of them. It's all smoke and mirrors on a con. But it doesn't mean you can't, it's the same as a casino. Yeah. You can't win in a casino. No one wins full-time in a casino. There's no professional gamblers out there that play roulette. Why? Because you can't win long-term. Same with prop. Trading you can, but if you go and play roulette and remove the zero, you can make a career out of that. But that zero means that every 40 to 50 spins, they take everybody's money. Everything you've made, the lot, they take it all. Yeah. Prop, they basically say you can't go over 5% drawdown. Why? Well, that's how you make money. But anyway, we know how to play them. You just basically keep doing evaluations, and then you gamble. You go in, you go big, you go hard, you go heavy, and you get a huge win, and then you walk away. Exactly the same as you do in a casino. If you walk into a casino and you put 50% of your money on one number on the roulette table, and you get that 36-1 payout, or whatever the payout is, what you should do is walk away out of the casino. That's what you do with prop. What don't you do in a casino? You go, I'll have another drink, please. I'm on a lucky streak. And then they take it all back. Anyway, I'm not the best person to talk about prop to, as you can probably tell. So that's all I've got for you today. There's nothing much else to discuss. We are sitting here waiting for chaos to commence tomorrow morning. So Bank of Japan is the first one tomorrow morning at some point. We don't know when. Quite often it's sort of around about the 4 o'clock mark. We get news from the Japanese, but it does vary dramatically. So I'm not going to be up, so it doesn't matter. So today, end of day today, I will be looking at my P&Ls. Anything that I have in profit that is worth banking will be put down there. Yeah. So any amount of money that I think there's, if I've got a single position on which is in virtually nothing, then it'll probably stay there. But anything I've got in profit of any decent amount is going in the bank ahead of the news. So all week I will be banking constantly anything that's in profit, specifically on the hedging account. So because you can't get it back yet. So this is part of what I don't actually cover in the bootcamp, and I've realised since I've been doing obviously the lives on YouTube, really, which is a couple of years. I should really have changed it, shouldn't I? But I don't cover this in the bootcamp, but I think it just kind of makes sense, doesn't it? If you're sitting on 2.5% profit in your account across multiple positions, and the entire position isn't in profit, put that down there, because one or two things is going to happen. It's either going to go in your direction, and that would have turned into 5, but all the ones that are in drawdown are going to go positive. So you win that and you win that. If it goes against you, you can't get that 2.5% back there. All that happens is it vanishes and it turns into drawdown, which means you've now got to manage it. So put that in the bank. Yeah. And then you can add it back on again. Can you make the ADR period an input? Wanted to try making ADR less sensitive. Probably could, but I know what your findings will be. Don't forget, I've done 30 years of research on ADR. You don't want to be using anything less than 10. I don't want to, no, is the honest answer. I've done a lot of research on it. I've researched all ADR periods. There's very little difference. ADR 5 is too sensitive. Anything over ADR 10 is too weak. The difference between ADR 10, ADR 5, and ADR 25 is that. Makes no difference long term. So the idea behind the EA is to keep it simple. If I start giving people every input under the sun, it makes it too complicated. So, but it doesn't. Honestly, it doesn't make any difference. Look at the figures. I think one of those. So if you look at the ADR figures there, must remember to put this back. Where's ADR 10? So if we go ADR 5. So those are the ADR 5 figures. So where we were a 43, we're now a 39. Where we were a 31, we're now a 28. Where we were a 64, we're now a 63. Where we were a 36, we're a 37. A 49 is a 43. 26, 22. Really doesn't make a lot of difference. You wanted to try 20? You can get all this data out. I mean, you can export all this data. You can export all the ADR data in the EA. So you could always recalculate it, but so there's your ADR 20. Yeah. Where we were a 43, we're a 44. Where we were a 31, we're a 33. Where we were a 64, we're a 58. We're talking 6 pips, right? yes, if you are trading a 5-minute time frame and you're trying to get in and out of a trade very, very quick, but you wouldn't be using ADR. If you're trading intraday, you would be using ATR, not ADR. ADR is a daily measurement of volatility, right? 36 is a 40, 26 is a 28, 74 becomes a 63, 10 pip variation. 10 pips. It's nothing on an hourly time frame, is it? So, I mean, I've done all this research. It makes very, very, very little difference to results at all. It changes on a daily basis. If you use the position trader EA to export data, you'll see the difference in ADR. ADR will double. ADR 10 will double over a period of time. It will drop by 25%. Some weeks it will increase by something, a third 2 weeks later compared to where it was a month ago. Yeah, but if you change that number to a 5 or a 20, it still increases by 25%. It still drops by a third. It still does the same thing. It will double, but the number will be different. That's all that's different is the number. So instead of a 68, you'll have a 74. But it will still be double what it was another time, or a third of what it was. Yeah, the ratios. Don't forget, what we're measuring is elasticity in the market. ADR 10 will give you that. ADR 20 will give you that. ADR 5 will give you that. We're measuring how far something moves up and down roughly over a period of X to give us an idea of lot size and what to expect moving forward. If you look at something like the US dollar yen, when we had an intervention move, there, right? So if you look at the intervention move on this is quite a good way of explaining how little the impact is. The ADR on this was that. Yeah, so those are the candle sizes. So your ADR figure forever was somewhere around about 35, 45, 55. We're sitting at 111 at the moment. Yeah. When that candle went in, your ADR on that day was 293. We're normally looking at 35. Yeah. So that day, after that intervention, that reading completely screwed the whole thing. And the whole thing was screwed for 10 days. There's nothing you can do about it. That screwed the number. The following days, it went nowhere near ADR ever because the ADR was absolutely huge. But it takes an average over a period of 2 weeks. If you take an average over a period of a week, your ADR export or your ADR graph would look like this. It'd be spiky. Yeah. If you took it over a period of 20 days, your ADR would be more smooth. If you took it over a period of 10 days, which is a couple of weeks worth of trading, half a month, it encompasses that sort of movement where we push and we pull in a month. Yeah, which gives you kind of a better average, a more consistent rough figure. It's all rough. It's all an estimate. It's all, none of it's of any use for accuracy. It's to give you a rough idea of it doesn't normally do this. Sometimes when it does this, what you're going to happen is the only advantage of using an ADR 5 in this case would be it would reset to normal faster. If you use a longer one, an ADR 20, for the next 20 days, your figures are going to be screwed. I want mine screwed for about 10 days. I don't want it screwed for 5 days or 20 days or 30 days. I want it screwed for roughly half a month if it's going to do it. That's really all you get. But it's only these sorts of things. It's news that screws ADR up. But it doesn't screw it up. It tells you that there's been some volatility. What happens after a news event is you tend to get a few days of volatility. Look at the ADRs here. Look. Tiny little 35s. Massive impact news. All of a sudden, ADR suddenly jumped up to 50. 55. We had a 60 in there, another 60. So because of the news, your volatility increased. So we want, and it's when we're trying to measure when what's the average roughly at the moment because of the current market conditions. That I found was too smoothed. Low periods I found was too jerky. Yeah. News events would go 500 ADR because you'd have a contraction when the market wouldn't move for a week. And then it would be a news event. But because the market hadn't moved, that would be a 500 ADR move because it's only measuring those 5 days. If you go over a longer period, anything over 10 is there's just hardly anything in it. But I researched them all. When I did my ADR research, I think I say it all in the ADR video on the website. But when I did my ADR research, I researched ADR 5, 10, 15, 20. I think it was just those 4. I have to dig out the spreadsheet. And I also, no, that was it with ADR because there's only 5 trading days in a week. So you go in multiples of 5. I'm looking for what's the average weekly movement? What's the average fortnightly movement? What's the average monthly movement? Roughly the same. Does it mean it doesn't? 70 people watching, only 34 likes. I forgot to push the bum button this morning, didn't I? Some people. What about removing the ADR outliers? What is an outlier, Michael? When do you know an ADR When do you know an ADR is an outlier? After it's happened. How does that help? Does it? So if we said, let's remove this one. Yeah. This is an extreme example, but let's look at this one. These are all intervention moves from the Japanese. When do you know you should remove that? When we've had a few days of normality that goes, yeah, actually that was way bigger than normal, isn't it? Too late. Okay, let's remove that from the equation now. Oh, hang on, now all of a sudden these are different. They're bigger ADRs. You can't remove anything. It's like saying, I've done a back test, right? And the equity curve went like that. Then it blew the account and then the equity curve carried on. I'll tell you what I'll do. I'll remove that. You can't remove it. It's happened. You can't remove stuff because you don't like it. You can't do it. It's a fact. It happened. You have to deal with it. This is why all the EAs out there you find in the marketplace are all crap, because what the producers of the EAs do is they go, oh, it didn't work very well there. We'll remove that. Did happen. Pros and cons said 10 is a Goldilocks period. It's not Goldilocks. It's the same as RSI. I say this all the time, don't I? In here, right? I haven't got an RSI with multiples on it, but it's the same as RSI. Which is the best one to use? The 70, the 75, or the 80? Sometimes it's the 70, sometimes it's the 75, sometimes it's the 80. Which is the best ATR period to use? Depends, doesn't it? So if you were using an ATR 5 and this week it hit 100% of ADR and bounced 50% of ADR every time, that's the one to use. If you change the ATR to 15, or the ADR to 15, and all of a sudden that made the market look more bouncy, but you would have been able to get in better, that was the best one to use. There isn't one. It's 10. The reason I chose 10 was because there was very little difference between 5 and 15. And it's 2 weeks. So it makes logical sense. How much has the market been moving? How much has the US dollar yen been moving up and down roughly on average in the last couple of weeks? About 110 pips. All right, so if I'm going to get in, I know that roughly in the couple of weeks prior, we've moved about 110 pips. So that's what I'll target. That's what it's used for. There is no accuracy involved in it. It's a rough measurement. If I use the ADR 5, it will be 94. So I might use a 0.07 instead of a 0.06. That's realistically the difference. It's going to change the lot sizing by maybe 5%. isn't it? That's what it's used for. ADR is used as a measurement of risk, and it changes. So when the market is contracted, look at the best example to look at is the US indices. Yeah, the difference between a bull calm and a bear volatile market is a really good way to explain it. Right, this is a bull calm. This is the market condition known as bull calm, which is where stocks and shares and companies are all trading nice and happily. Everything's good. The economy's stable. Everybody's happy. We're just making shed loads of cash. Everybody's happy. Everybody's calm. We're in a bull market. We're all making money. This is what your ADR is. Yeah. It's roughly a big day is going to be about 60 points. A small day is going to be about 30. You're going to get the odd news event, which is going to drive you up to 130. But that's what happens 99% of the time. 50, 60 pips or points. Going to a bear volatile market. A normal candlestick in a bear volatile market is 80. Look how big these candlesticks are compared to these candlesticks. Yeah. So what we're doing using ADR is we're saying, are we in a big, vast, wide movie market, or are we in a little tiny contracted market? Yeah. Is everybody nice and calm and we're not moving a lot, which means we've got to get out quicker and get in quicker? Or are we in the big wafty thing where we need to reduce our risk because it's nuts? That's what ADR, that's the use of it. And the difference between a 5, a 10, and a 15 is still measuring, are we in a big one or are we in a little one? Yeah. The difference being is a smaller number will change that number faster. Is that good or bad? Depends what happens in the future. Yeah. Whether or not it's good to change it every 5 days or good to change it every 10 days or good to change it every 20 days will depend on what the market does in the future. And we can't control that and we can't see that. So pick one. But I can tell you from my research, I went roughly in the middle because, and again, I've mentioned it many times before, bell curve. Yeah. Outliers are not something that happens all the time. US dollar yen intervention candles of 600% of ADR are up here in the bell curve. We had 4 of them in the last 2 years. Very, very rare. Where the market is totally flat and doing absolutely nothing, very, very rare. What does it do most of the time? That's what we want to know because we are going to be trading all the time. So what does most of the time it do? Outliers caused by news and stuff, you can't control. You can't do anything about it. So you can't exclude them because they happened, but you just have to deal with them. There is nothing that works because, and this is the problem with indicators, that there's nothing that works all the time. If someone says to me, oh, look at that 9 moving average. If you had used a different moving average, you would have got a better result. So if you'd have used a 15 moving average and you were playing bounces, you would have got a much better result with a 15. Yeah, look at it. Much better result with a 15. But then you go to another time period in the past and go, actually, the 9 worked better. So then you start using a 9 and then you go, oh, it's not working very well, the 9. That's because the market's a little bit different. So if you change your instrument over and over and over again, bloody hell, why can't I select the, okay, to a 20, it's like, hang on a minute. The 20 is much better because it only gave me 3 entries and it's 100% strike rate. Oh no, it gave me 4, 5. Look, beautiful, much better. Much better than the 15. But then in the future, the 15 or the 9 or the 20 will be awful. But if you change this all the time, all you're doing is you are matching the indicator to the past market condition, which has nothing to do with the future market condition. So you need to pick one, stick with it, that is roughly sometimes right. The problem with trading is everybody's looking for the Holy Grail, and the Holy Grail is the instrument that doesn't get it wrong. It's impossible to not get it wrong because the market conditions change every day. There's no 2 days that have the same candlestick pattern, ever. So if there's no 2 days that ever have the candlestick pattern the same, i.e. it's 100% random every single day, how could you possibly pick an indicator that's in the past worked and have it predict the future because it's random and it's never going to be what it was anywhere back here? No indicator works. So therefore, no setting of any indicator works. And if you've got an indicator that's got 25 possible combinations of settings, it's the worst thing you could ever have, because there's 25 ways you can get it wrong. Still can't predict the future. The only way you make money in the market is by getting into the market and waiting for the market to become profitable. At the moment, it's not profitable. Tomorrow morning, it will be profitable, or it won't be profitable. I have no idea, but there's no indicator that's going to tell me which way that's going tomorrow, is there? And it doesn't matter what setting I use on that indicator. I don't know, looking at the US dollar yen now, an ADR, I haven't got the ADR on there, but I don't know, looking at the US dollar yen now, whether or not I should be using the last 10 days worth of daily movement, or the last 3 months worth of daily movement, 3 weeks worth, or the last whatever days worth of movement to indicate how far the US dollar yen is going tomorrow, because I don't know. Useless. Where's this going to be tomorrow? There's no historical candlestick pattern or day that you can look at in the past to tell you whether or not the current climate in Japan means that they will move their interest rate for the first time in 8 years from a negative 0.1 to a 0. There isn't an indicator that tells you this. Just chuck it all out the window. That's why I said technical analysis this week is utterly pointless. Can't do anything with it. The only way it will help you is if a news event comes out which has no bearing on the market at all, because it's what we were expecting and it's exactly the same as we we're expecting. There's no deviation and the market spikes for no reason whatsoever. The only thing I would ever use is resistance, because the last time we got to this level, they sold it. There's absolutely no reason for that to happen, so I'm selling it, because that's where everyone sold it last time. And if this move is nothing to do with market movement in the future, it's only going to do that. That's the only indicator I would ever use, support and resistance and propulsion, because these are where the banks have moved the market. And if there's no reason for a fundamental to move it anywhere, the only people that have control of this is the banks. So where did they move it from last time? 125 ADR. So if it spikes up to 125 ADR, that's where they sold it from before we started this 5-day rally down to the downside. I'll get in with them. I don't know if the people that got in there still want it to go down. If they don't, it's going to fly through it. I don't know that either. So this indicator has absolutely no use in predicting the future, because it tells me what happened in the past. They can't help you, can they? Indicators. This oscillator tells me that there was relative strength there that was beyond normal. It helped me predict a future movement. But if at that point in time, the Japanese said they're going to increase their interest rates, this would fly down and this would be embedded down here for weeks. So that's absolutely useless, the RSI. This time, it was brilliant. Tomorrow, because we're up there, does it mean it's coming down? No, it's doing what the market does, because the market will decide where this goes. Not us. We have no control. We're on a train. On the way to a station, and we don't know which way it's going to go. Mr. Blue Porsche recently made a video basically saying stop losses are crap. And hedging is now how he makes his money. Yeah, he used to use stop losses, and that system strategy that he sold didn't work. So he made a new system and strategy that he's now using. But what will happen is this one will go wrong, and then he'll do another thing. He had a compounding course for a while that he was selling. I think he still is selling it as well. And yeah, he was like, yeah, compounding's awesome. Blew 10 accounts in the row and went, let's do hedging now. Hey, look, everybody, all the money you've paid me has bought me a Porsche. Thanks. I mention no names. I say nothing about an individual. I'm just saying this is how the market works. People get something, they put it in a box, they sell it to you, they rebox it. People probably accuse me of this, don't they? I bought out the market reversal alerts EA 3 years ago, 4 years ago, 2020, 4 years, something like that. Maybe 3. I've just released a new product, which is very, very similar. I'm like Apple, right? Hey, you bought the market reversal alerts EA? Hey, this one does a lot less. Buy this one. I think I'm probably in the same box, aren't I now, really? But I produce something which is better than the original. because it doesn't do all the stuff the original did, because no one needs all of that crap. Exactly what I've just said here. Strip all that rubbish out. None of it works. Press the button, get in, and let this thing get you in while we're waiting for the market to move. You don't need to tweak this. You don't need to tweak that. You don't need to use this. You don't need to use that. Just press the button and wait. Mr. Blue Porsche, who's hedging, that hedging strategy will be really, really good until he gets a wide hedge. And I'll tell you why he will fail. Or anybody doing it will fail. If they don't do drawdown control or just close out these trades in a loss. Yeah. So if that happens, fine. But what will happen is you go long and you go short. That's your hedge. You get down to here. You get out of the short because you think it might bounce, right? And it doesn't work. It then comes down. So you go short again. Your hedge, which was there, is now there. That hedge is 4 times bigger. Your loss is 4 times bigger than it was. Right? So it goes down and it starts to bounce. So you get out of that short and it goes, oh, no, I'm going back down again. So you go, oh, I'm going to re-hedge it. Now your hedge is there. Bloody hell, that's a big loss. It's not a loss. It's just a hedge. It's all right. It will come back. And then it will go down and then it will come up and you'll go, oh, brilliant. I'll get out of my shorts here. And it pops down and you go, oh, I'm going to re-hedge it. Now your hedge is that big. Holy crap. So the size of my unrealized loss, it's not realized, just a hedge. Oh, hang on. Why is your Telegram group gone quiet? Hey guys, I've got this new strategy. Rinse, repeat. That's what happens. So that's why hedging doesn't work. It does work, but what you should be doing is going long, going short with a hedge. There's my hedge. My price moves down. I get out of my short and I take some profit and I reduce the size of that trade and I go long. Now my average price is here. And if price moves up enough for me to get out of that with a break even, I just made a profit. Position trading. There's nothing wrong with hedging as long as you turn it into a position trade afterwards. Because if it goes down and you re-hedge it, that is a much smaller position. Your average is closer to price. At some point, it will probably come back up. But think about market structure. Think about what I do all day long. Low, high, higher low, higher high, higher low, higher high, higher low. In this case, sideways movement and a retracement because it was the yen. But let's say it went higher high. Your hedge that started off there because you didn't know whether it was going up or down is now that big. That is unrealized loss. Other people call it drawdown. Huge. If you haven't done drawdown control along the way, you are just sitting there going, please, 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 please increase the interest rates. What do you mean you're going to drop them from 0.1 to 0.2? Will happen. Will happen. Guarantee it. Or you have to shut it. So you have to set a limit. You go, I'm going to get in 4 times. If it hasn't worked in 4 times, I'm just going to take that 17, 20% loss on my account. What happens? There's a really good video on YouTube by a guy. And he comes across as quite scientific, which is why I watched it, because I'm all about maths and statistical advantage edges, basically, which is what he was. Very mathematical equations into his hedge calculations. And it all works really, 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 really well in the examples given. So I built an EA to test his hedging mechanism, and it worked really, really, really well. And it kept doing that. And I was like, shit, this is good. And then it went like that. And I was like, why did it go like that? Because the hedge gets to a point where it's so wide that when it moves down inside of itself, called an inside hedge, what happens is it sits here like this for ages. And in here, during an inside hedge, you cannot get out of the hedge and you cannot make money on the hedge. What you should do is try and work the inside hedge to pay for the outside hedge, right? Problem is, when you've just started working the inside hedge to pay for the outside hedge, and it looks like it's starting to work, the market then goes into a trend again. And your hedge just gets wider and wider and wider. And you end up being stuck in the hedge pretty much forever. Think about a market that trends. If you started hedging there, you're dead. There is no way out of a hedge. You lose. You take a loss. You get out. You scrap it. Look what I'm doing with the Euro Swiss at the moment. I'm going to get out. I'm going to scrap it. I'm going to take a loss because I can't get out. If it keeps going, you have to draw the line and go, no. What I'm doing is I'm playing the edge of 80% of the time the market is in a range, so mean reversion works. When the market is stretched, the banks take profit. Sometimes they don't. Those are my losses. They happen 2-3 times a year. That's it. Hedge, when you get stuck in it, is a never-ending drawdown. Can't get out. Just doesn't work. But people will find it out. You will find it out. This is why it's important to have automation. And this is one of the key things and one of the reasons I build EAs constantly is to test theory. You cannot test a theory visually with any speed that makes any impact on your ability to trade a strategy, because you've got to test all the different parameter permutations of a strategy, because you're never going to get the entries that you want with the strategy. Yeah, if a strategy says you get in at 70 RSI and the thing jumps from 62 RSI to 80 RSI on the news, you're getting in at 80, you're not getting in at 70. So all that back testing you've done at 70, worthless. Because you didn't get in at 70, you got in at 80 because the market flew through 70. So you've got to test 70, 75 and 80. Does it matter if I got in at any of those levels? Did it work all the time? It did. Brilliant. You've got to build automation to test all the different parameter permutations, because you're not going to get what you say you want with your entry. You're asleep. You miss the entry on the US dollar yen because you're asleep. And that is the one that makes 17% increase on your account in the back test. But you missed it because you're asleep. So you make 17% less because of one trade. Got to be able to test that you were asleep and you got into that trade. Yeah. So this is why I do all this automation and statistical analysis on everything, because I'm constantly trying to prove myself wrong. I've proven hedging doesn't work without drawdown control. Doesn't work, because eventually you will just get to an explosive point in the hedge. Here's DCAing as well. It sounds like he's just copied me, doesn't it, basically? Wouldn't be the first, won't be the last. So many people have tried to copy what I do. But I don't copy anybody, you know. I think what he likes. He's selling a course, basically, so... He probably is watching the Bootcamp. Yeah, he's only about 10, isn't he? Yeah, so if he's DCAing in, that's fine. As long as he's doing drawdown control. It's fine. DCAing in is no problem. I think I built that guy that I said about that works the hedges inside and stuff. I built his, because he gave the exact mathematical formulas for how this hedging system works, and is not infallible, but very, very good. And it is very, very good for a period of time. But that 20% where the market trends, you're dead. You're dead. If there's not normal market movement, it won't work. Yeah. In a squeeze. And this is the downside to hedging as well, which again is probably not something that's mentioned in the course, right? So in a hedge, you're in both directions. When the market moves in one direction, okay, you have to decide when to get out, because what you've got to now do is try and get back in the opposite direction, ideally, or re-hedge that position. If the market then moves down, but it doesn't move down far enough to get out of your trade, and sits there and does this for 2 months, right? What people don't realize is you don't take a profit. So for 2 months, you don't have an income. Because what's happened in the hedge is it's paid you one direction, and now you're waiting for the opposite direction to come out. It's a bit like us, a bit like me in the euro pound, yeah? I'm in 1.46% of drawdown on the euro pound. I've banked about 2% or something on it over the last 3 months, but I've been in this since the 2nd of January. Right? It's not paying me any money, which is why you need a portfolio approach. So if you're going to hedge, you need multiple hedges. If you're going to do multiple hedges, you've got to make sure you spread your money across lots and lots of different pairs. But you've got to understand that some of those pairs are just never going to pay you for weeks or months on end. So if you are in a hedge which gets you into 10% of drawdown, and then you get into 2 other hedges and they put you into 30% of drawdown, you've got to be aware that you're going to sit in 30% of drawdown for weeks on end without being paid, and you've got to have the balls to take another trade with the potential of it going into a similar sort of drawdown. It just is so difficult to manage. Look at what's happening with the hedging account. Like I keep saying, I am always in drawdown on the hedging account. But it's always banking a ton of cash. But I'm working these hedges all the time. It's so labor intensive. Got to do drawdown control on it. It's or cut losses. Yeah, the hedges just get so wide, or they just you never get out of them. We'll see what happens, but you know, the particular person in that I know for a fact, you know, I've been watching over the last year and a half 3 different strategies, and it keeps changing. Yeah, it's like a back test. It's like an EA that's been released, and every 3 months they give you a new set of set files. Why? Because these old set files don't work. Because the old set files were tested over a period that made profit. And now the market is different. That doesn't work anymore. Here's some new set files, guys. Look at the test results over the last 3 months. And all they do is they just move the set files along every 3 months and give you new ones that look good. Yeah, but nothing takes into account what's going to happen in the future. You change it, and you change it again, and you change it again. But I think we all know that, don't we? That's, you know, this is why everybody struggles to make money. You know, Swiss is pushing again. Look. Nah. Blue Porsche makes a ton from his Telegram membership. Yeah, and then he gambles some of that on his trading accounts. Join the stream late out of the XXX JPY longs yet? I'm not in any XXX JPY longs, I'm sure. Short on the yen. Right, I'm going to leave it there. I've got to get on with some more testing and stuff. So I'll be back tomorrow at 8 o'clock. And we will obviously look at the fallout from the Bank of Japan. So tomorrow morning, obviously, is the big one, BOJ. And then we've got the Aussie announcement. We've got both press conferences. So this should all be over by 8 o'clock tomorrow morning. We will all be over by 8 o'clock tomorrow morning. So we will know what the outcomes of those are. And we'll have a look at what's happened, basically. And see if we did get any changes on these interest rates. These are the 2 that could well have changes, and the Swissy. I mean, the Swissy definitely this week has got opportunities for change, but the Aussies have done it before, and the Japanese have said they are going to do it. So there is a possibility of a lot of big upsets this week, but then again, there's a possibility of it doing absolutely nothing. So we will see. All right. So anything you need, let me know. I will be in Telegram and Discord. Tomorrow morning, 8 o'clock, back to have a look at the yen and the Aussie. And then 12:15 tomorrow afternoon as well, we're going to be on for the CAD CPI figures. So that's the main interest rate tomorrow for the Canadian dollar. So we'll see how that impacts the market as well. All right, so have a good day. Anything you need, let me know. I'll be in Telegram and Discord, and I will see you guys in the next one.